folks, I'm going to give you an inside look into my largest concern on one of my largest paying dividend stocks, a big fan favorite of the investing community. And of course, I'm talking about that Altria group. I'm going to give it a side-by-side comparison, some of my concerns related to British American Tobacco, Philip Morris, and I want to pass the question off to you to ask you guys what you think about my opinions here, because I did mention this, but I didn't do a deep dive analysis. Now, Altria group, if you bought it today, is paying a 7.1% dividend. We are not really getting any capital growth, but like a bond, you're kind of just buying it for the cash flow that you're going to get off of it today. Between these tobacco giants, MO, I currently hold about 180 shares. I'm actually up nicely, about 7% on this, and you guys have known that I've been holding this for quite some time now. British American Tobacco, another favorite of mine, trading down slightly, and taking a look at that cash flow, guys, because it's insurmountable. It's huge. I mean, take a look at this: 7.6% yield off British American Tobacco, 7% off Altria. Total combined annual yield between these two is over $1,200, making up one of my largest dividend income segments with really tiny amounts of capital. Realistically, I mean, I barely have 8,000 in each one of these companies. But let's dive down in and just talk about the biggest concern that everyone's well aware of was the decline and the actual expansion in the decline up to the pandemic of cigarette and tobacco users, primarily on the smokable product side of the business. And in 2020, in the midst of the pandemic, for the first time ever, we saw a null decline in the amount of people decreased in smoking, people quitting smoking, but it was building up year over year. And keep in mind, these decline patterns are from the year prior. So it is expanding at an expansive rate, right? And if we get into this, guys, they kind of manipulate their books to make them look a little better than they are. I don't recommend taking the EPS numbers at a glance on companies like this, because if you did, for the last quarter, they've seen an increase of 8% in revenue from 5.6 billion to 6 billion. And same with the 6-month end up 0.8%. But when we actually take a look into their individual segments and the actual shippable product, when they're shipping by cigarette sticks, we can see here, guys, that they've seen a 5.3% decline on the total cigarette sales, with Marlboro getting hit really hard. Actually, every one of their segments here have actually been hit. They saw a mild amount of growth in cigars, but nothing that actually makes up a huge amount of income for them, considering Marlboro is literally the entire company's primary product. It does like over half the revenue of everything else combined. And when you actually go down farther into this, folks, and say compare it to some of their growing segments like the oral products, you'd think, hey, again, growing revenue numbers here, guys, growing over the quarter, growing over the year, but you dive down into it and look at the shipment volume, and they are still decreasing. Again, on the 6-month end, and I guess primarily even on the last quarter, they have been decreasing, the major segments at that, not the other, which includes Red Seal and some of their other brands, which slightly increased by 39%. But when you're talking about such a low volume, it doesn't even come close, like not even like 100th% of the closeness to what Marlboro is doing for this company. And when you take a look at what I thought would be pivoting this company into the future, let's talk about Kronos Group here, guys. This company cannot get a foothold in the MJ market. It has been a struggle and a grind, and we have not figured out where they're going in the US with regulations surrounding the MJ market. And a lot of people are hinging on the idea that if they federally legalize it, that this company, because of their mass distribution, is going to have some kind of foothold. But if Canada is an exemplifier to what a challenge that has been, I don't think it's just going to be set in stone as easy as, oh, one day this company is going to be selling tons of MJ related products, because for the last few years, that has not been the case with this massive investment. What about Juul? Juul has been a continued write-down. They continue to write it down in their business, and it has been failing miserably after being one of the most popular vaporizers on the planet. With British American Tobacco's Views is actually growing in popularity on Google search, and that's the little red line we see here. And IQOS, represented by Philip Morris, has also been seeing a decline in search results. However, again, doesn't reflect the bottom line. So let's talk about British American Tobacco first and see how they're doing here, because this is a company that has been generally flatlining, trades at a much better valuation than many of the other tobacco giants. But taking a look, guys, with their new categories in the vapor market, they have explosive growth. Absolutely explosive growth. So on the non-combustible, the total non-combustible product, total group volume, I guess we can say here, is up 30% And this is still insurmountable to the amount of cigarette sales, but this is the kind of growth we have to see because we're going to eventually hit an inflection point where the number of smokers in decline, if you cannot find another product to surpass that in revenue growth, eventually these companies are going to start showing troubles in their bottom line earnings, which again, they manipulate them fantastically. So taking a look at Philip Morris's total cigarette sales by region here, this is relatively really great insight because we can see that they are also seeing a decline across almost every single region, primarily except the South and Southeast Asia. I guess a little bit of the Middle East is growing here as well, but Latin America and Canada seeing a slight increase. But overall, guys, a total decrease of 2.2%. On the heated tobacco product units, this is what we want to see because we're seeing a 30% growth rate, again, insurmountable compared to the cigarette deliveries, but it is growing at a level that is keeping up with the pace of smokers quitting. And obviously, we could take this into consideration that some of these smokers are slowing down on that and buying into their vapor products. So they're kind of just shifting the focus of their current customers. However, like I said, when it comes to MO, they are not doing a good job at this. They are losing on every growth vector they have facing them. And when you just take a look at these total heat products, guys, against, again, Marlboro, which is just getting slaughtered even on, because Philip Morris and Altria kind of share the Marlboro brand. But across these smokable segments, guys, this is not a good story to tell for any product. So when I'm looking at these, I see a future forward-facing risk, and that is when the inflection point happens, when these companies have to make up for the loss of smokers and other product sales. And luckily, Philip Morris, British American Tobacco are finding a foothold in the vapor market, but it is highly speculative on understanding how big the scope of that market can get versus the amount of people that are purely just quitting smoking and basically not using any of these products. So what am I going to do with my my MO shares here, folks? Well, I've told you that I do plan on selling them. I am by no means in a rush to do so because I think for the next 5 or 10 years, these companies are still going to be showing great revenue. I don't think they're going to have any major hiccups. It's just when you're looking 10 years plus out, it is not a bright future for these companies from any way you look at it. I mean, the stocks I don't think are going to grow because these companies aren't exactly getting thrown into ETFs as exciting companies to own for people. They are, however, doing share buybacks, which is what I think has been driving up most of MO's share price. But again, we're buying these presuming they're bonds almost. Like, we're not looking to get equity growth. We're looking for stability in cash flow, and it is a rarity finding something with such a high yield that can offer such a stable presentation of, you know, dividend growth and dividend payout. So like I said, I'm planning on pivoting that capital. I'm not sure if I want to switch it out for Philip Morris. I may potentially keep my British American Tobacco sales because these two companies with Philip Morris are actually proving the capability of their future innovation, whereas MO has not proven that to me yet. And I'm going to be patient. I might not sell it this year. I might sell it in a week, depending on what the markets do, but I would rather hinge myself into a lower yield with something like MPW, Medical Properties Trust, or heck, even buying the S&P 500, because those companies and those kind of ETFs, even though I'm not getting a yield, a huge yield, I mean, MPW is still paying out over 5%. I just see those businesses as fundamentally being longer term. Like, if I'm looking 20, 30 years out and I want to rely on these for the rest of my life, again, taking that dividend cut sometimes for long-term benefit can be worth it. But again, I'm going to pass that question off to you. What do you guys think about this? In that comment section below. If you have exposure to these, I'd love to hear about your opinion surrounding these most recent earnings filings that I'm going to be eyeing like a hawk in the coming quarters. So stay cool, stay awesome, and I look forward to catching you tomorrow.